In the metals quadrant, March silver futures hit another cycle high at $59.90 today before pulling back and then ultimately driving back toward those highs at the end of the session. Silver has now made 4 new highs in the last 6 sessions, and the high today was $59.90, as I mentioned, which was up 4.19%, while the low today was $57.32, which was only down about 0.3%. As we come into the close of the futures session, silver is still up 2.99% with some time left in the session. On a weekly basis, silver is finishing up about 3.6% on the week, which makes it the 3rd week of higher prices in the last 4. Now, economic data today included PCE and Michigan consumer sentiment, and it did nothing to derail the narrative for a rate cut next week. Today's PCE inflation figures, remember that's from September, came in right on target with the headline up 0.3% monthly and 2.8% yearly. The core was also, as expected, at up 2%, that's 0.2% monthly and 2.8% yearly. The Michigan Consumer Sentiment Index climbed to 53.3, topping the expected 52 and ending a 5-month slide from November's 51. Stocks jumped about 0.5% across major indices, and the dollar fell, keeping Fed rate cut odds steady at about 87% for next week's meeting. More important to silver prices than next week's expected FOMC rate cut is the guidance from the statement, the press conference, and the summary of economic projections. Markets now see an 87% chance of a 25 basis point rate cut next week at the Fed meeting, meaning it's already mostly baked into silver prices, yet history shows that guidance packs more punch for precious metals, like in May 2025, when FOMC language on rising uncertainty lifted gold by more than 3%, despite steady rates, with silver jumping 4.2%, with investors eyeing long-term policy shifts. The statement, the presser, and the SEP, or the dot plots, will shape expectations for 2026, potentially sparking greater volatility in precious metals, including, of course, silver.